A very good evening to one and all present, and thank you for joining with great exultation for the webinar on law of succession and HUF tax planning. I welcome our Tirupati branch chairman, Sri CA Garu, and I welcome Nellore branch chairman, Sri CA Krishna Garu. Thank you very much for both the chairman of Tirupati and Nellore for hosting this webinar jointly. I welcome today's speaker, Sri Dr. CA Phalguna Kumar Garu, past chairman of Southern Indian Council of ICA, a man of distinguished vision and dynamic personality in continuous updation of laws and regulations of professional.
మ్యూట్ లో పెట్టుకోండి సార్, ఎక్కువ ఆగిపోతుంది.
మీరు మ్యూట్ లో పెట్టండి సార్. పెట్టారా సరే, ఓకేనా సార్?
Okay.
So, a man of distinct vision and dynamic personality in continuous updation of laws and regulations of professional interest, and a person with a service motto to the CA fraternity. Thank you very much, sir, for accepting our request for being the speaker for today's webinar in spite of our busy schedule. I welcome our most valuable members who have joined for this webinar. Thank you one and all for all your gracious presence. Now I request Tirupati branch chairman Sri CA Garu to address the gathering.
Om Namo Venkatesaya. Respected first SRC chairman of and first exception member of Tirupati branch, first regional council member for 3 terms, and today's speaker and chief guest, Dr. CA Phalguna Kumar Garu, managing committee of members of Tirupati and Nellore branch, members and participants of Tirupati and Nellore branch of SARC of ICA, welcome you with a warm good evening to all. It gives me immense pleasure to welcome you to the web seminar on law of succession and HUF tax planning conducted by Tirupati branch jointly with Nellore branch of SARC. I am greatly thankful to our senior member and guru speaker CA Phalguna Kumar Garu to accept our invitation in short notice and coming to the today's webinar, and also for Tirupati branch functioning, SAR cooperation is always is there. We all know the significance of tax planning of HUF, and today our speaker will take to all the important aspects regarding the subject and also the latest developments and amendments by the decisions of Supreme Court. Our speaker, sir has participated early several CPE live meetings all over India, in hundreds of meetings, and sir has given a valuable speech in the similar topic. I herewith announcing that Tirupati branch is going to conduct a webinar on tax audit on 3rd October, the coming month, by speaker Sri CA Ramesh. All the members are kindly requested to give their feedback and suggestions through our Tirupati WhatsApp group regarding future webinars and topics of our Tirupati branch. All the participants can send their queries through chat box during the webinar, and speaker sir will reply the queries during the question hour section at the end. Once again, thanking you and all. I request Sri Narasimha Garu to receive the proceedings. Thank you, sir. Thank you, sir. Phalguna Kumar, sir.
Thank you, sir. Now I request Nellore branch chairman Sri CA Krishna Garu to address the gathering.
Thank you, Narasimha Garu. Good evening and a warm welcome to all the Nellore and Tirupati branch members for this beautiful session on law of succession and HUF. It is a great pleasure for me to introduce an eminent speaker like Dr. CA Phalguna Kumar Garu, who is a fellow member of ICA, practicing as a chartered accountant at Tirupati since 1979 for the past 41 years. He is a managing partner of E. Phalguna Kumar & Co. His age is now 65. He is married to Srimati Vijayalakshmi Garu, who is a doctorate in home science and worked as a principal of TTD College. They are blessed with 2 children, son and a daughter. Both of them are a qualified CA practicing with father. daughter-in-law is also a practicing chartered accountant in the firm. Mr. Phalguna Kumar sir is also a flute player also. He has completed his education qualifications like MA, MCom, MBA, DL, DSA, PhD, and many other. He is a member of Institute of Company Secretary of ICI, Company Secretary of India, and also he got qualified in the Independent Directors Eligibility Test of ICCA of MCA of GOI. He was appointed as a member of Board of Studies of SV University and also SP Mahila University for the period 2012 to 2014. He presented more than 370 technical papers in the past in various CP seminars in all of the 4 southern states and CA branches. On GST, he has delivered more than 50 lectures across South India. He got his doctorate in accounting and auditing standards for non-profit organizations from SV University, Tirupati. He is serving the society as a trustee and executive member of several charitable institutions at Tirupati. He has been appointed as a finance committee member for the 3 years 2020-2022 of ITT Allahabad, IIT Allahabad. He was elected to the Southern India Regional Council of ICAI in December 2009, 2012 and 2015 elections. He was the chairman of Southern India Regional Council for the period 2016 to 2017. With this light introduction, I would like to welcome our faculty, Phalguna Kumar Garu, to our session. Thank you.
Thank you.
Thank you, sir. I will request the speaker CA Phalguna Kumar Garu to start the technical session.
Yes. Om Namo Venkateshaya. Good evening to all of you. The respected chairman of Tirupati branch, Sudarshan Naidu, my close to heart branch, Nellore, dynamic chairman, Sri Vamsi Krishna. Why I say, my first CPE seminar was in 2005, February on VAT Act, because from 2005 April VAT was going to be introduced. AP state government, then AP state government gave me the training and asked me to go and give the lectures on VAT. So 2005 February for the Nellore branch, first VAT CPE seminar I have conducted. From then onwards, several topics, income tax, this GST, VAT, several topics I have taken up. So now all the members, it seems still some more members now. At this moment, 39 members are there, and maybe some others after some time will join. When the subject heat picks up, they may join. Now the COVID time is the time for learning. In fact, past 6 months, what I would have learned in the past 3-4 years might have been doubled in the past 6 months because of a lot of time available and a lot of reading, webinars, so much. So I hope also are increasing their standards as per the expectation of the government, and this webinar also as part of the government's and ICA's scheme, the 2 branches jointly have organized, and I thank the managing committees of these 2 branches, and I will start the session. Though on HUF alone 2 to 3 hours one can speak, it is better to understand the law of succession. It is otherwise called as law of inheritance, but I particularly named it as succession. So the 2 hours today, I will split into 2. The first one is the succession. First 1 hour, I will try to cover quickly the provisions of succession, because the 2 are HUF and succession are interrelated. HUF and succession are interrelated. So some of you might have heard this topics earlier. And as Tirupati branch chairman has said, last month, August 12th, the Supreme Court has delivered a landmark decision in the case of HUF, the Union of India amendment of Section 6 of the Hindu Succession Act in 2005. So what is the effect of this amendment? A very, very interesting and a larger bench. Earlier also there were decisions which I am going to touch. So there was a bench decision in 2015, Prakash versus Fulati. So that decision has been overruled by a larger bench in 2020, August 12th, last month 12th. Thereby, the HUF, who are the co-partners, the ladies, women rights in the HUF has been enlarged. So what are all the consequences? So all those things definitely will take a longer time. But anyhow, to make it more interesting, I have taken these two topics, law of succession and the HUF. So within these 2 hours, I will try to cover up as much as possible quickly. First of all, I start my salutations to my parents who are no more, the gurus who have taught us, especially the senior CAs who have shared their knowledge. So in the past 45 years, I attended the CA's lectures. I have learned so much, a selfless service from the other CAs. So my salutations and pranams to those who have given me this knowledge, which I am trying to share to some extent to the members. Now coming to the word succession, what is the difference between a succession and an inheritance? Because if you want to talk about HUF, you must deal with the Hindu Succession Act 1956. Just now I touched that Section 6 of the Hindu Succession Act 1956. So what is the succession law in India? That we must see. So the succession and inheritance is, succession means property passing on from one person to another person. How we should pass. That means how we should move. So a partnership can be succeeded by another partnership, especially when a partnership firm dissolves and immediately new partnership firm is formed. It is a succession of one partnership by another partnership firm, one limited company by another limited company, one person's business by another person succeeding. So what is the legal effect from the income tax point of view? We have to see, because we are dealing day in and day out taxation, not the pure civil law, but the income tax provisions and how they are going to be applied, interpreted. Lot of cases. Actually, I have on the law of succession before the Hyderabad IT80, I have a 5 crores demand matter. So unless we know the law, especially the income tax officers have got a lesser exposure to the civil law of succession. Thereby they wrongly interpret the civil law. So unnecessarily they will be taxing someone who is not liable. They may be leaving who is really liable. So this understanding of the law of succession is more important, how it is, how the provisions will get affected, because these are all the rare instances, just like your COVID now. In fact, I am sorry to say, more than 20 of my high tax paying individual clients expired due to COVID now in the past 6 months. So if suddenly a person dies, how his property is going to pass on, how his tax liability is going to be shared by his legal heirs. So these things may be the rare instance. Maybe for young CAs this opportunity may not be there, but knowing the law is nonetheless a case rarely may come to you like a situation like this. But here, as professionals, we must be ready, because the difference between a professional and ordinary person is, professional is for unexpected problem, an unexpected solution giving person is the professional. For expected problem, expected solution, ordinary people will give. So as experts, we are supposed to know this law. That's why I have taken up this succession first 1 hour, and then the HUF, and through HUF, what is HUF and how to have some tax planning in HUF within the permissible 4 corners of the law. So the succession is already taken care of in the Income Tax Act provisions. Why? Because an assessing officer assesses a person. As we know, the definition 231 person includes 7 categories: natural person, the individual, the HUF, partnership firm, AOP, when BOI, limited company, artificial juridical person. Artificial juridical person may not have that ending, but an AOP may have, a limited company can have, a partnership firm can have, a natural person can have, an HUF also by a total partition will come to an end. So then in different situations, how the tax has to be computed? How the tax has to be computed means, as we say, as we are witnessing, due to COVID, a person dies in September, middle of the year. So his income up to this middle of the year, after his death, in the name of the deceased, his legal representative has to file the return of income. Where is this? In section 159. In section 159 of the Income Tax Act, after the, I am trying to, one minute, I am coming back. Hello, branch Susan, are you able to share the, I am sharing my screen.
Yes, sir.
Are you able to see?
Visible, sir. Visible, sir. Yes, sir.
Visible, all the people are able to see it, okay? Okay.
Yes, sir.
Okay, so first I am taking section 159. What is this 159? Legal representative as defined in the Income Tax Act, section 229. 229 of the Income Tax Act says, as the meaning given in section 211 of the Civil Procedure Code, the legal representative is liable to discharge the liability of the deceased. The assessing officer presumes, as per this 159, the legal representative as the assessee. The assessee word is defined in section 27. Assessee means who is liable to pay the tax, file the return. So on behalf of the deceased, the legal representative is liable to file the return. Then 159, this is 159.1, subsection 1. 159.4, 5 and read with 6. The 159.6 says the liability to pay the tax of the deceased by the legal representative shall be restricted, limited to the estate that is passed on by the deceased to the legal representative. So you please, I will give 2-3 examples, then you can understand what is the difficulty, what is the real effect. For example, an elderly person died. His death can happen in two possibilities. A, he writing a will, he without writing a will. Let us say he has 4 sons. He wrote a will, first example you take. The elderly person writing a will died, and all his property shall go to his 4th son only after his death. Now, this elderly person died in September 2020. Now, the 6 months income, a return has to be filed by him, the person, the 4th son, who is getting the property of this elderly person, should file the return for this 21-22 assessment year. For the 6 months, he must pay the tax. From the date of death till the completion of the previous year, the income in his own capacity. If he is having his self-acquired property, along with that self-acquired property, what he inherited from his father, that also he should pay. Now 3 questions may come. How the officer is going to know only the 4th son should pay? The law 159 says the legal representative who is getting the estate of the deceased, he is liable to be assessed as an assessee on behalf of the deceased. How the officer is going to know? There are several decisions, including the Supreme Court and several High Court decisions, which say even by without knowing, if the assessing officer assesses the deceased after his death, that assessment demand is null and void. So assessing officer shall not, after the death of the assessee, shall compute the income, pass the assessment order in the name of the deceased. So how the officer is, because it is the duty of the legatee, the person who is going to receive the property on behalf of the deceased, it is his duty to intimate the assessing officer, I am liable, I am filing the return. So this man should take the responsibility and file. Now, the person who is getting the property keeps quiet. The assessing officer comes to know that the deceased has 4 sons, deceased had several properties. In the name of the deceased, rents are received, bank interest is received, TDS. So in that same PAN number, TDS is there. Officer will issue a notice. Then in that door, first son is there in the door number. Then say the first son will say, my father died, this is the death certificate. So you please issue the notice to somebody. So then the officer will inquire with the bank, inquire with the property records with the municipality, in whose name the property got transferred, in whose name the bankers have transferred these monies. So the officer in the first instance, at the first instance, may issue a 148 notice if it is time over. Otherwise, a normal notice 142 to the all the 4 sons, because he knows that the deceased after inquiry is having the 4 sons. To all the 4 sons, the officer will issue a notice. Then the first 3 sons should say, as per Income Tax Act, we are not legal representatives. Please go through the definition. The person who received the property only is the legal representative to file the return, pay the taxes. We are not liable to file the return. We are on our own behalf. We have to file. On behalf of the deceased, though he is our father, need not. So similarly, there may be some instances where the deceased would have written a will in favor of third party. In his neighbor's daughter's name, he wrote the will, let us say. Now the officer will issue notice to the 4 sons. All the 4 sons will say, though we are the legal heirs, we are not the legal representatives. Legal heir is a person's natural offspring is legal heirs. Legal heir certificate also sometimes you will obtain from the Tahsildar. Tahsildar will inquire, he is a living person, he was a living person, he had these persons as legal heirs. If wife is there, wife is a legal heir. The children are there, so they are all the legal heirs. But under the Income Tax Act, legal heir is different, legal representative is different. Legal representative need not be a legal heir. All the legal heirs need not be legal representatives. This we should know. Properly reply. There should not be mistake on the part of the assessee, or there should not be mistake on the part of the officer to wrongly conclude, wrongly interpret, and wrongly do it. So this is the liability and this thing. Actually, we should read 159 with normally 176. Why? Because mostly with business people only these questions will come. If it is a non-businessman, non-business income person, you can read and keep quiet with 159. Whereas if it is a business person, you should read section 159 together with the 176. Not only business, say professional also. Now I am jumping from 159 to 176. What is 176? 176 says, if a business is discontinued due to death, retirement, or 176.4, 176.3a deals with business, 176.4 deals with the profession. For example, an advocate, senior advocate in a high court, he is selected by the government, he is becoming a high court judge. Then high court judge is government servant. He shall not carry on any practice profession. But as a professional, he was filing his returns on cash basis. Though he stopped his practice the moment he is selected to the bench of the high court, his old clients will pay his fees. Now, that professional income, under which head he has to admit? He is a government servant. Salary he receives. So, from the consolidated fund, because it is a judiciary. So, even if a professional, for example, a chartered accountant, many chartered accountants died due to COVID. The chartered accountants are practicing and admitting their income on cash basis. Suddenly he died. So then clients, honestly, we utilize your services, your father's services. Please, you the son, though not a CA, please take this fees. Now the son, he has to file in his individual capacity as income, or in the name of the father he has to file. This is covered in 176.3.3a, which says even if a business is discontinued, even if a profession is discontinued, after discontinuation, if the business receipts are there, professional receipts are there, as if the person was alive, income has to be filed and return has to be filed and taxes have to be paid. So originally this was not there in the Income Tax Act due to a Calcutta High Court decision in 74. From 76 onwards, this was amended and brought to tax. Otherwise, it would not have been taxable. From 1976, this is taxable. So this is 176. So now the 159 in several cases gives very peculiar circumstances. For example, a person just before his death would have sold all the properties. He vanished the money. He made the money disappear. How the money has gone, no one knows. But he was enjoying the life like anything, because he is the greatest philosopher, you think that what is the use of keeping some money for legal heirs? Let me enjoy. Never he filed the returns. He sold the properties, he spent the money lavishly, he died. For 2-3 years he has not filed the return of income. Now what the officer can do? Because nowadays the digital technology, how many properties he sold, how much through bank he received and then encashed, what the officer can do? Because the person who died never wrote a will, never left any property behind. So unless some property is left behind, unless somebody receives such property, there is no possibility of the officer recovering some tax. He cannot ask somebody to file the return and then pay the tax. So that is the law. So I told you 159 deals with the death of a natural person. The other things, other sections briefly I have touched because we are trying to understand the succession. So the succession of a natural person can happen two ways, I told you. First is on account of death. If the person has written a will, actually, will is a big subject dealt with the Indian Succession Act 1925. So the Hindu Succession Act 1956 is part of the codifying of the Hindu law, which was not codified. So 4 acts have come. The 4 acts are the Hindu Marriage Act 1955, Hindu Succession Act 1956, Hindu Adoption and Maintenance Act 1956, and the Hindu Minor Guardianship Act 1956. So the 4 acts related to Hindu law to some extent, to a larger extent being codified, made as a law. After the independence, the parliament formed a commission and then say brought these 4 acts. So through these 4 acts, what the property is passing, how the personal law is being governed, we can see. So if a person dies without writing a will, actually when I take up after 2-3 slides the will, I will try to explain you number of possibilities of writing a will. So there are several possibilities of writing a will. So the will and its writing a will, how it, through will the property will pass, registered will, unregistered will, total properties, part of the properties, all these things we'll discuss. Now the second possibility of death is without writing a will a person dies. I gave one example that a person wrote a will to his 4th son, he passed on, through will his property totally passed on to the 4th son. So the 4th son, how he is liable, other 3 sons are not at all liable to file the return or pay the tax, I explained. Now the other example I tell you, the person died without writing any will suddenly because he thought that he will not die, so he never wrote a will. Those who are confident that they will not die, in the law, in the common saying, Jatasya Murnam Dhruvam, or Adi Shankara says in Punarapi Jananam, Punarapi Maranam, Punarapi Janani Jatare Sayanam. So in Bhajagovindam, Adi Shankara says, death and birth are so common. Common saying is, for every person, 2 things are certain. What are 2 things certain? One is death is certain. Second one, certain thing is paying the taxes. So though direct tax, income tax you may not be paying. Nowadays everyone is paying indirect tax. At least whether they eat the food or not, they hold the cell phone. Even a roadside sweeping person also will be holding with one hand the cell phone. So cell phone means you are paying the GST. So GST is indirect tax. So without paying 1 rupee tax, nobody survives. The consumption tax is there. For surviving, you must consume. Consume means pay the tax. So tax and death are 2 certain things on the earth. So the second possibility of death is without writing a will, somebody died. Take the same gentleman example. He died and he is having 4 sons. Now the property will go to the 4 sons, because if he is having a wife also, the person to which religion he relates, based on that his property will go. You please understand, any religious person can write a will. A Hindu can write a will for his self-acquired property and HUF property. A Muslim can write a will only to 1/3 of his property, he can write a will. More than 1/3 of the property he wants to pass on through will, other members of the family should give consent if he is a Muslim. If he is a Christian, there is no joint family. Only for Hindus you have HUF. For Muslims and Christians, no MUF, no CUF. So A Christian being a self-acquired property man, he can write a will, no problem. So all the wills are governed by the Indian Succession Act. So in case a person dies without writing a will, then the question, to whom the property will go? It all depends upon the religion to which he belongs to. That's why if you read sale deeds, purchase deeds, registered deeds before 1960s, normally you will find seller being a Hindu, purchaser being a Muslim, like that, or seller being a Muslim, purchaser being a Christian. The religion is also mentioned in the sale document, because based on the religion, the property he will get. I will give 2-3 examples, then you will understand better. So that is the law of succession. So I am mixing the income tax and the law of succession simultaneously, and then we will have a better understanding. So if the old man who died left behind his wife, 2 sons and 2 daughters. Now, the old man's self-acquired property, if the old man was a Hindu, then the wife and 2 sons, 2 daughters, all the 5 people will get 1/5, 1/5, 1/5, because he has not written any will. So all the 5 people will get equal share, 1/5, 1/5, 1/5, 1/5. If the old man who died is a Hindu. If the old man who died is a Christian, the wife will get 1/3 of the total property. All the 4 children will get 2/3 of the property. If the old man who died is a Christian, 1/3 of the total property what he left will go to the wife, and 2/3 will go to all the children. That means 4 children have to share 2/3. That means you will have 1/6, 1/6, 1/6 each child. If the old man who died is a Muslim, then wife will get some share. The 2 sons will get twice that of the 2 daughters. The Muslim personal law is known as the Shariat law. For the Hindus, what I said is Hindu Succession Act. For Christians, what I said is Indian Succession Act 1925. Whereas for the Muslims, it is not a codified law. Only Muslim law as on this date is not codified. That means it's not through parliament. It's only by custom. It is there. So the Muslim personal law, son should get double that of the daughter. As many daughters are there, that many shares. As many sons are there, each son should get double share. So you should multiply. So that's how the Muslim personal law is there. So this is how the succession law depends upon the religion to which they belong to. So under the Income Tax Act, the assessing officer should know to which religion the deceased belongs to. Thereby, the property that of the deceased is going to the persons to whom it is going, because there is no registered will, there is no will at all. So to whom the property is going, on them the assessing officer should serve a notice that the deceased having this much tax arrears, the deceased return till the date of death you have to file. So like that, the assessing officer should know the correct legal representative, and the officer should serve the notice on the correct legal representative, and it is the duty of the legal representative to correctly file the return and pay the tax and get it discharged. So this is about the natural persons. So still some more examples after exhausting these other options, I will try to explain the succession. Okay, now section 160 representative assess. What is section 160 representative assessee? You know Section 5 scope of total income. Section 5 scope of total income in the case of a resident is equal to Indian income plus foreign income. So resident status section 6 deals with. Charging section 4. So section 5, in the case of a non-resident also earning Indian income, a non-resident earning Indian income must file the return and pay the tax only for Indian income. A non-resident resident status section 6. Even this 2020 budget, what the amendments have done, you know well. So a non-resident, he is not in India, his properties are there in India, they are giving some income. Then every year who has to file the return? The government cannot serve a notice on the person who is residing in America. So his properties are giving income. Somebody on his behalf is receiving the income. Then that somebody who is receiving the income is known as a representative assessee. That representative assessee should file the return. So for non-residents, one example in section 160 covers trustees. For example, a old man is having a minor as a son. Old man writes a will and dies. So the minor cannot transact. So he appoints his cousin brother as a guardian, trustee. And he says, till the minor attains the age of 25, you maintain this property, get him married. And after marriage also, till he gets 2 children, you maintain as a trustee. After marriage, when he begets 2 children, then you hand over this. So it's a private trust. So the old man created a trust through his will and died. The trustee is a representative assessee. So that's how the representative assessees have to file the return, pay the taxes, and discharge the liability on behalf of the estate. Similarly, section 168, executors. Number of examples I can give, but in the limited time, the law, because it's not in the CA syllabus, the succession law is not there in CA inter or final. Through practice also, unless we go through the civil law, we may not be able to understand. Merely reading the income tax sections, we may not be able to understand the civil law. So that's why I'm trying to explain through other acts, succession acts, how the income tax act is depending upon. So section 168, executors. Actually, when you write a partnership deed, normally what you learn from your senior, first part, hereafter called Mr. X, hereafter called the first partner, which term shall mean and include is executors, administrators, legal heirs, all that blah, 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 we write. What is the difference between executor, administrator, legal heir? Because if by chance this partner is dying, that partner term includes executors. What is executors? That means the deceased's estate, as per the wish of the deceased, who is going to distribute among the legatees is known as the executor. If the deceased has not left any name, has not named through a will a person as an executor, then whoever assumes the role of executor also is an executor. Or there is a dispute among the legatees, how to share. They go to court. Court will appoint an administrator to take care of the estate of the deceased and then to distribute. Court will pass an order for distribution. But till the distribution means somebody should manage. Then that person is known as administrator. So the executors and administrators are liable for income tax of the deceased, and after the death, till the assets are distributed to the legatees, the income is generated, maybe 6 months, maybe 1 year, 2 years. So the court-appointed administrators or executors are also liable to file the returns. So the executors, normally if one executor is there, he will file in the capacity of an individual. The total estate in the capacity of individual return, the executor, besides his personal return of individual status, he must obtain another PAN number and then should file the return. That is, the executors and administrators are also liable to file the returns to discharge the deceased's tax liability or to continue the deceased's appeals, deceased assessments, scrutiny assessments, and then pay the taxes. So the executors and others I have tried to explain to you. Then section 170 of the Income Tax Act. Succession to business other than on death. Example, partnership firm. That's why whenever we write a partnership firm, normally if more than 2 partners are there, we write a clause, even in the case of death of a partner, firm shall not get dissolved. Why should you write that clause? If 3 partners are there, and if you don't write this clause, whether 3 or 4, 1 partner suddenly dies, then firm as per the Partnership Act suddenly gets dissolved. Out of 4, 1 died, remaining 3 may continue the business, paying back the 4th person's share to the 4th person's legal heirs. Immediately the business is continued. The firm gets dissolved. If the firm gets dissolved, because under the Income Tax Act, firm is assessed. Partnership is an agreement. This partnership firm, you must go to section 184, 185, and 187. So, partnership firm, when it is assessed as a partnership firm, it is evidenced by a partnership deed. So, the deed is filed to the assessing officer. So, according to the deed, the accounts are to be finalized. So, you go to 184, 185, 187 sections. So, there you will get that. So, the firm, if it is dissolved, just like a natural person till the death one return, and after the death another return, the firm dissolution date in the middle of the year because of the death of the partner, because there is no clause in the partnership deed about the dissolution being not to be considered as per the Partnership Act. So for partnership firm, 1 year, 2 returns you have to file, because in the middle it got dissolved on account of the death of a partner. So first period, 1 partnership firm, 1 return. Second period, another partnership firm, obtain another PAN number and then file the return. So always to be on safer side to avoid this, we will include the clause in the partnership deed that in the case of death of a partner also, the firm shall not be dissolved. But when you should write it, 3 or more, if only 2 partners are there, even after the death of 1 partner, firm shall continue. How proprietor can continue the firm? You should not write it. So the succession of a business by another business which is continuing, not necessarily partnership firm, by a proprietary concern, by another thing, then the erstwhile business, if it is not discharging the tax liability, the successor, in case the assessing officer comes to conclusion that the first period business tax liabilities are not recoverable from the first period people, then whoever succeeds the business, the second person shall discharge the liability of the first person. The successor should discharge the liability of the predecessor. And this is about the business, section 170. So I'm going to section 171. 171 subsection 1 says, a HUF which is hitherto assessed as a HUF, if it is totally partitioned, section 171(1), a HUF which is hitherto assessed as a HUF, if during the previous year, if it is totally partitioned, then after the partition also, the before partition liability of the HUF shall be dissolved by the members of the HUF who were the members at the time of partition, 171(1). Then 171(3), the assessing officer shall record the evidence of the total partition, 171(3). So if the partition is there, it is the duty of the HUF to say how it is partitioned, a total partition. Evidence it. The assessing officer shall issue to all the members notice, record their statements, and then pass an order, that is 171(3). Then 171 subsection 9. 171 subsection 9 says, From 31st December 1978, no partial partition shall be recognized of a HUF. In the Hindu law, a HUF means, as we all know, Hindu undivided family. Several persons live jointly, and if one person wants to go away with the family, the head of the family, normally known as Karta of the family, you take away your share and go. You live on your own. It is permitted even now, so that the total HUF will continue. Only that portion of the property which the one of the co-partners takes and moves away. Natural. Nowadays, the psychology is living too much independently. We don't adjust with others. We want our ego to be satisfied. I need not concur with even my parents. I want to hoist my individual flag. So the children generally differ with their parents, take their share and then move away. So that is known as a partial partition. So if it is a partial partition, then how to assess number of partial partitions? One HUF is becoming 4 sub-HUFs. So it is becoming a big menace for the income tax department. So the income tax department says, though under the Hindu law, you have a partial partition, under the Income Tax Act, a HUF which is hitherto assessed as HUF shall not be recognized from 31st December 1978. So it shall continue to be assessed as a HUF only. This is section 179, subsection 9. So the HUF, how it is going to be assessed, how it is going to be taxed, I can tell you after some time. When we take up now the succession, I am trying to explain you. So now 176, discontinued business or profession. So the succession to business, I have told you, this 176 discontinued business or profession, when I touched 159, the legal representative, I have touched this 176. So 176, even after the death of a professional or a retirement of a professional, so discontinuing of a profession. So a chartered accountant died due to COVID. The chartered account fees is given to his son or a daughter who is not a chartered accountant, maybe a housewife. Even that housewife, if she receives her father's professional fees, she has to file the return as if it was the professional income because of 176 subsection 4. If it is a business, 3 and 3A subsections of 176A, even a discontinued business, if it is giving income after discontinuation, shall be there. Just like your house property 23 says, even if you are not owning a house, the house rental arrears you receive. So the arrears received also, whether you are a owner or not, the house property income still you have to admit, but you can claim that 30% repairs also. Why this is I am telling you here, the Income Tax Act still is having some rare lacuna for a salaried person who died. After his death, salary accrues, arises, a new pay commission is formed, back to 5 years. So from 5 years back, your salary, all the employees, you calculate from 2016, because pay commission every 5 years. So 2016 to 20 you pay. That man died in 2020 April, 2020 April, a salaried employee died. Pay commission is formed in say September 2020. Salary arrears are paid in 2021 March. Is the salary arrears received by his wife taxable? 1 rupee need not be admitted as income and pay the tax by his wife, though their salary arrears. The difference, a provision similar to this 176(3) or 4 is not there for salary income. So salary arrears are normally taxable in the hands of the employee. Salary arrears accrued arise till the date of death, definitely taxable even after his death, in the hands of the legal heir or legal representative who receives that. But salary arrears accrued arise only after his death is not taxable. As I told you, because of the Calcutta High Court decision that what accrues arises to a deceased man is not taxable unless there is a specific mechanism in the Income Tax Act. So that's how we should understand the income tax law. So then I'm quickly going, because of time shortage, I'm trying to cover up speedily without giving more examples. 177. So in the case of an AOP dissolved, AOP, BOI, when they get dissolved, so if 5 persons, 6 persons together start a business, if they write a partnership deed is a partnership form, as I told you, 184, 185 sections. Whereas if they don't write a partnership, but still, because sometimes only in the search case through a diary you will be knowing 5 persons done the real estate brokerage business, 5 persons jointly go on purchasing, selling without any registered documents. Ultimately, some business, some income, no partnership deed, in the search it is found, then it should be assessed as AOP. So then if it is assessed as an AOP, then at the time of dissolution of AOP, who are all the members? They are all jointly, severally liable. Even in the case of HUF, joint and severability of all the members. In the case of partnership, as we know, Partnership Act 1933 itself says joint and several. So in the case of AOP also, the Income Tax Act says that even a dissolved AOP is liable, the members are liable. Now I'm going another to section 178 for the company. Because the Income Tax Act, it covered the death of a natural person, cessation of the other persons in 231, like partnership firm, AOP, limited company, HUF. So all these things are taken care of. The sections, broadly, if you go through these sections, the initial section says who is liable. Then its subsections are say, the following sections say how to compute the income and how much to discharge, how to compute the income, who is liable, to what extent he is liable, how to compute the income, and then how to discharge the liability. These are all the things you will find in the Income Tax Act. So the Income Tax Act, when we are studying and then practicing, though these are all the rare circumstances. For a practitioner, day in and day out, one may not get these situations, but one must be thorough with the law, then only according to the law, we can discharge the liability, duty and liability. So rights are there, duties are there. So how to do all these things? Just I tried to explain from the income tax point of view about this succession. Now, other thing. So, a deceased person's name, TDS is created during his lifetime. After his death also for 2-3 months, the legal heirs could not inform. Just like that salary person, the employer says, only in the deceased part number I will upload the TDS. Even rental income. So deceased person's name, TDS is uploaded. Then the legal heirs, as the liability is there, in the previous slide, what all the sections I said, liability to be discharged. This 238 is a refund chapter. In this refund chapter also, just like your 199 in the TDS says, whenever the income related to TDS is admitted, in the year in which it is related, TDS shall be given credit. That is there in section 199. Here 238, in the person's hands that income is admitted, that person is entitled to take the credit. So 199 talks about 5 years TDS. Only in the 5th year the bank total interest is admitted on receipt basis. So only in the 5th year total income is taken, then the 5 years TDS shall be created only in the 5th year TDS claim. So similarly, if a deceased's income is now included in another person's hands, then the other person in whose hands the income is assessed, then the TDS also shall be given and then refund shall be given. So that's how 238.1, 238.2, deceased's refund. Deceased was entitled to refund. Then the legatee, legal representative, who is filing the return of income, he can file the return and say, give the refund to me. I am the legal representative. I filed the return. Maybe the deceased during his lifetime would have filed the return. Refund is not issued, processed. At the time he died. Then also, Though in the return, deceased's bank account is there, deceased name is there. When the refund is issued, the banker will say, no, that account is closed. Now it cannot be credited. Then the legatee, the legal representative, who is liable to pay, is having the right to claim that refund also, though he has not filed the return of income. So that's how this 238(2) talks about the deceased refund, which can be claimed by the legatee. Now the death, when we are dealing, members may be afraid that so many deaths today we are talking about in the COVID time. Why always talk about the deaths? Initially it will be always there. It is not like eating sweet and then savory. Now I am serving you savory. After some time I will serve the sweets. Please wait. Don't read about the killing of so many people in this 2-hour session. I will make union. You all also individually practitioners people, how you can join as a HUF, I will try to tell you. So please wait. So the appeal proceedings. A person was assessed. He filed the appeal. When before appeal coming for hearing, he died. Then while filing the appeal, your wakalat you have filed. Now can you continue? Your wakalat is otherwise known as power of attorney. Any power of attorney. Somebody sold the property. You purchased, paying heavy money, you purchased that property, but without registration, you have taken only a power of attorney. Even a registered power of attorney. For members' knowledge, I tell, power of attorney rules differ from state to state. In Andhra Pradesh, a registered power of attorney is valid without any time limit till the death of the power of attorney given person. Example, Mr. A purchased the property from Mr. B, paid the full money for some reason or the other. Like in a particular place, the government says it is a TTD property, it cannot be registered, sub-registrar says, in a particular colony. Then they pay the money and simply get the power of attorney. How safe the power of attorney? If the person, the owner who gave the power of attorney dies, the power of attorney is zero, not legally valid. Then his legal heirs may sell the money, may not sell the money. The legal heirs liability is only to return the money you have given to them as sale advance. So the sale consideration they will return after 3 years, 5 years. You cannot get the property. So power of attorney has got its own advantages and disadvantages. So in Andhra Pradesh, power of attorney time limit is not there. For example, in Tamil Nadu, power of attorney 6 months only valid. Its validity is not eternal. So state to state, the power of attorney, stamp duty, time period will vary. So in the appeal, if somebody dies, the appellant dies, as a representative, you have to take a fresh wakalat and then continue saying that death certificate, fresh wakalat from the legal heirs or the legal representative. So I got the wakalat. You please, I am producing the legal heir certificate and then the wakalat also. So I am continuing the appeal. If it is the first appeal, if it is the second appeal before the tribunal, the IT80 rules 1963 rule 26 and they are replaced by 2017 IT80 rules rule 31 says you must file fresh appeal once again. Anyhow, the old appeal will de novo will come back, but the first appeal form 35 appeal will file, whereas the IT80 form 36 you have to file fresh form 36 and then through miscellaneous inscription, then the proceedings will continue. That's how death, how we should be there. Now a case may come. How to prove the death? Some cases, some people's death cannot be proved. A person left just like that. His properties he left like that. His own place also he left like that. Then how to prove the death? So this is not talked about in any succession law, but you should go to the Indian Evidence Act 1872, 107 and 108. 107 says, the person who says death, it is his duty to prove the death. That is section 107. Section 108 of the Indian Evidence Act says, if a person's whereabouts are not known continuously for 7 years, that person is deemed to have died. You please see, I'm repeating section 108 of the Indian Evidence Act. Indian Evidence Act says, if a person's whereabouts who was living for 30 years his whereabouts are not known to anybody, then whoever claims that his whereabouts are not known for 7 years, if he says, gives a declaration that my father left Tirupati, for the past 7 years where he is, we are not able to know, then in that case, the whereabouts, when they are not known, then he is deemed to have died. The court will give, saying that you are the legal heirs. When you apply for a succession certificate, then automatic succession certificate has to be given by the court, legal heir certificate has to be given by the tahsildar. So when you apply for a succession certificate, because unless you get a succession certificate, the banker will not, for example, the deceased has deposited a half kg gold and taken a loan, and before his leaving, he cleared the loan, but he has not taken the jewelry. When you go to get back the jewelry, the banker will say, hey, your gold is deposited by your father. You are saying his son. I can believe you, but please get a certificate from the court, that succession certificate you are entitled to receive. Then the court will ask, where is the death certificate? The death certificate is for past 7 years. His whereabouts are not known. He is deemed to have died. So natural death you can prove. Sometimes you cannot prove the natural death also, because the person who left, nobody knows where he has gone. Then also a deemed death. So that's how this thing is there. Then I will go to quickly. So the succession, as I told you, self-acquired property, ancestral property. Please try to understand. Please try to understand. Any person can have 2 types of properties, especially for Hindus, because for Muslims and Christians, there is no difference between ancestral property and self-acquired property. So in the case of Muslims and Christians, there is no difference between an ancestral property and a person is owner of a property for the total, only one return. Whereas in the case of Hindus, 2 types of properties are possible. That means what he got an absolute right as an individual is self-acquired property. You need not compare the word self-acquired, means he himself earned. After becoming major as an employee, as a businessman, what he earned is not self-acquired property alone. It is self-acquired property plus from his father, from his mother, from his father-in-law, from his grandmother, whoever gives to him, whoever simply passes on through will, also is self-acquired property. Then what is ancestral property? Ancestral property means from his grandfather, something percolated through his father. You please see the male chain only. Up to 4 degrees, grandfather's father left something to grandfather. Grandfather's father would have left 1 acre. Grandfather left 5 acres. Father left 10 acres. Now this man's hands, all the 10 acres is ancestral property. So 3 degrees above, the property is continuously, not necessarily the same agricultural land, not necessarily the same place. One property sold in some other place, brought another commercial agricultural lands of 40 years back, would have become a commercial property, and that commercial property is now enjoyed. That is also ancestral property. So the ancestral property is coming from 4 fathers, then it is ancestral property. He is holding a Hindu, is holding a ancestral property on behalf of the family. He is not the absolute owner. He is getting the property, but he has no right to individually enjoy the property. On behalf of the family, within the law permitted source only, he should enjoy the property, because you please understand these 2 words. I will give 3-4 examples, then you will better understand. Without this understanding, whatever I tell about the HUF, whatever I tell about the other succession acts, you will not be able to know. That's why at this juncture, I brought this point that a person taking a PAN number should file the return of income for his self-acquired property, maybe business, maybe house property, maybe the income, salary income, individual income necessarily. So then house property income, then business income, the capital gains, the other sources, whatever it is. You should distinguish between the source. If the source is the ancestral property, it is in the hands of a Hindu, it is a HUF property. For HUF, you should take another PAN number and then you should file the return of income. For self-acquired property, individual PAN number. So this is self-acquired property and ancestral property differences. Source is the criteria, number one. Number two, self-acquired properties rights in the hands of the person. I am not distinguishing now. I am not distinguishing now between the male and the female because of the 1985 in the country India. Andhra Pradesh is the first state. The late Honorable Chief Minister N.T. Ramarao first time has amended Section 6 of the Hindu Succession Act, saying as on 5/9/1985, as on 5/9/1985, in the state of the then combined state of Andhra, all the unmarried daughters in the family, all the unmarried daughters in the family shall be treated at par with the sons of the family. They get the equal rights in the ancestral property. So the 1985 Amendment Act is followed by 1989 Tamil Nadu Hindu Succession Act Amendment, 1994 the Karnataka and Maharashtra amended. After 20 years of 85, 2005, the central government, Union of India, because this is in the concurrent place, they amended for the throughout the country. Wherever the Mitakshara Hindu law is being followed, only in West Bengal you have Dayabhaga, that we are not concerned. So throughout the country you are having the Mitakshara law. The Hindu Succession Act 6 refers to Mitakshara. So the Hindu undivided family, the daughters are also entitled to equal share along with the. So we are talking about the daughter's right also as ancestral property. We are talking about the sons also at par the rights in the ancestral property. The ancestral property rights one gets by birth. Self-acquired property rights from another person one gets by death. The difference between self-acquired property and ancestral property is, if my father's individual property, when I will get the right, during his lifetime, if he gives to me, I will get. During his lifetime, he didn't give a gift. He wrote a will and died. The will come into existence only on his death. After his death, I will get it. He didn't write a will and died. Then as per the Hindu Succession Act, in his self-acquired property, I will get a right only on his death. Whereas in the case of ancestral property, my grandfather's property has come to my father's hands. I get the right in the ancestral property. I need not wait till the death of my father. From the moment I was born, in fact, the Hindu law specifically says, especially the Hindu Succession Act, Section 20 says, the moment the person is in the womb of the mother, even if a partition takes place when the mother is there in the womb of the mother, even if the karta dies when the child is in the womb of the mother, after the birth, that natural person, as if was alive for partition, share they are entitled to on behalf of such minor the guardian. That's why I said Hindu Guardianship Act 1956 along with the Hindu Succession Act. So Hindu Minor Guardianship Act specifically says up to the age of 5 mother is the guardian. Natural guardian is up to the age of 5 mother. And after that they can decide mother or father till the age of 18 attaining that. So the ancestral property rights, by birth getting rights, self-made property rights, others property, when somebody will get that, when somebody is no more, by death you will get there. So this is the difference one should understand, and then I will try to explain that HUF, how it is a best tax planning tool. I would like to explain, which is a more value addition rather than the mere legal say terminology and the words. As a practitioner, one should be more conscious of getting the HUF, because the individual basic 2.5 lakhs, HUF also basic 2.5, ATC individual, and again HUF, the health insurance 80D, or say section 54, 54F for individual and HUF, these exemptions. So if there are really there is a ancestral property, really there is a HUF, if we ignore it, you will file only one return in individual capacity, department is happy, it collects the tax. Whereas if you have 2 PAN numbers, really 2 statuses are there, better you can do lot of planning. Thereby, what is HUF, how really to bring it in, what are the risks involved in it, and what care one has to take, all these things you must see. So succession, regarding the succession, I am going to the pure law. Earlier only income tax provisions, through that I explained. Now I try to explain you something about this succession. So the Hindu Succession Act, the Hindu law, right from Manusmriti, the law, the oldest personal law on earth is the Hindu law. The Hindu law, oldest law, because what is law? Law is nothing but an event, if it is followed by repeatedly, becomes a habit. A habit followed by a group of people becomes a custom. A custom followed for several years will become a culture. A culture of a particular community will become, over the years, acceptable as a law. Courts recognize these customs. For example, Muslim Shariat law, around 1300 years ago, when Prophet Muhammad had died, the Muslim religion, what the Prophet has professed, the Quran has professed, is becoming the custom among the Muslims. Though the Shias are there, Sunnis are there to maintain. Here in India, majority are the Sunnis. So the Sunnis' personal law is there emanating from the customs only, the culture of the Muslims' religion only. It is not yet codified. Whereas the Britishers, when they were ruling the country before the independence itself, they brought this Indian Succession Act 1925. So the Indian Succession Act deals with the succession other than Hindus if they die, because Hindu Succession Act is not applicable to the other religions. Hindu Succession Act applies to Hindus only. Hindu word includes Hindus, Buddhists, Jains, Sikhs. Hindu word doesn't include Parsis and Jews. So the Muslims and Christians. So the property, how it will pass on, is dealt with for Hindus exclusively in the Hindu Succession Act. Even in the Hindu Succession Act, male succession is different from female succession. Section 8 deals with the male succession, Section 15 deals with the female succession. When the succession is barred, declared as not valid, is also there in the Hindu Succession Act. So the Hindu Succession Act deals with the Hindu succession of property. The Indian Succession Act deals with the others. The Hindu Marriage Act 1955, the Special Marriage Act 1954. What is the difference? One should understand. This is a little bit interesting for all of you to know. Nowadays, because of the most colorful cinemas, in my childhood there were only black and white cinemas. Our emotions are black and white only, not that colorful. Now there is no picture in black and white, even if you want to see. Everything colorful. That means everything highly emotional. Ultimately, all the people marry as they like, not as the family likes, as the individual what they like, either boy or the girl. Now, the Hindu Marriage Act says, if a Hindu marries another Hindu, as per the Hindu Marriage Act, his rights in the joint family will continue. If a Hindu marries either another Hindu or another religious person, not as per the Hindu Marriage Act, under the Special Marriage Act, the moment he marries, the moment she marries, her right in the joint family, full stop, no more. So, but the difference, the succession stops. So how it stops? Because of marriage. So what stops? I give an example, simple example for you to understand rather than telling these words. In a Hindu traditional family, a girl having got a software engineering skills, high salary, then naturally she falls in love with another software engineer. She tells her parents, I want to marry him. Oh, the other person is not our religion, or even if for our religion, not our community, not our caste. Subsects will be there. For example, even in one caste, like you call Brahmins as a caste, but in Brahmins also so many subsects are there. Similarly, any caste, for example. So he is not our subsector, don't marry. No, I want to marry. Then suddenly one day, she disappears. After 10 days, she comes back to the house with another boy with garlands in the neck. I married him. Where you got married? Certificate. Register office. So the marriage is registered in sub-register office means it is a Special Marriage Act. They will give a certificate. No problem. What she is losing? If the father is having both individual property and self-acquired property, in the father's ancestral property as a co-partners, her right in the family which she got by birth, she is losing by going for Special Marriage Act, and or not necessarily that Special Marriage Act. Second alternative was, if one gets converted into another religion, she declares that hereafterwards I am a Christian, I am a Muslim, I am not a Hindu. She declares herself. The moment she declares, she loses her right, what she got in the ancestral property. Be careful what I said. She will not lose her right in the father's individual property. After that, seeing that girl, within a week the father died. She still, even after conversion, even after marriage, the right in the father's property, she will not lose self-acquired property. What she loses only in the ancestral property. Why? What is the difference? Because for the self-acquired property, still she is a daughter. So, because for the Hindu undivided family, on the day she claims partition, on the day she claims the right, must be a Hindu. Whereas for self-acquired property, the property succession takes place on the death of the father. On the death of the father also, she is a daughter only. Maybe converted into another religion, doesn't matter. So she gets a right. So I am telling you the difference. Hindu marriages before 1955 were 7 types of Hindu marriages. The Hindu Marriage Act has prescribed 4 types of marriages. So the marriage, how it should be performed, tradition, the fire should be there, Saptapadi should be there, so the mantras, agam, shastra should be there, then it is a Hindu marriage. Hindu Marriage Act, there is no necessity of registration, like your partnership deed. If you want some other legal rights, go to, after marriage, within 15 days, go to the sub-registrar, then get the certificate, that marriage certificate. It is extra. Whereas Special Marriage Act, no rituals, only registration. So registration certificate from the registrar is sufficient. So the other religions also marriage is evidenced. For example, Muslims marriage from the masjid, a book is brought and the Qazi will write the marriage, solemnization of marriage by a priest in Muslims. In Christians also go to the church, the marriage is solemnized in the church. So the Special Marriage Act is a registration, whereas only out of registration the marriage is solemnized. So the moment it is solemnized, if he or she belongs to a HUF, they lose their rights in the HUF, but they are not going to lose the rights in the self-acquired of the property. So that's how the difference is there, which we should know how the property will pass on when we are, because Income Tax Act practicing means the person is entitled to property, entitled to income. That income, is it self-acquired or is it ancestral? So the income property, how it passes on, unless we know income in whose hands, when it is taxable, we may not be able to understand. That's why I have told you. Now another thing, this should come in the HUF tax planning. Here itself I am telling you, a HUF not necessarily by generation should come. The court decisions say, if the father, all his self-acquired property, he writes a will, you son, you are the only son to me, even then I am abundantly taking caution, I am writing a will that after my death, all my property shall be enjoyed by you, your wife and children, jointly as a family. I gave the example that the father wrote a will saying, after my death, all my self-acquired property only, nothing I got from my father, your grandfather, grandmother, never they gave me, only my self-acquired. But he is writing a will. What the word he is saying? Na tadanantaramu neevu putra pautra vamsya paramparyamuga. This word is so important. If that word is there in the will, the son gets the property not in his individual capacity, a new HUF capacity, he receives the property. From then onwards, a HUF return son has to file. So the will also can create, will is otherwise known as testament. So a person dies intestate means without writing a will, a person dies known as intestate. A person testament means, so through the will the property he passes on. So the passing on through will is known as a testament. So if a person passes us, uses the words, you alone should enjoy means the person will get in individual capacity. You should enjoy with your wife, children and grandchildren perennially as a family means, then the new HUF is created. That's what I say. Through death also something can be planned. That is the HUF planning. So one tip I said, like this, something more is there. I will try to explain in the coming few minutes. So what is a person dies intestate, a person testamentary. As I told you, Muslim personal law is a Shariat law. For Sunnis it is different, Shias it is different. Whereas Shias have to pray 3 times a day. So there are differences in the religion. As I said, religion means prayer itself is different. Hindu prayer is different, Christian prayer is different. So like that, the Muslim law is uncodified. So the Muslim law, if a person wants to write a will, only up to 1/3 of the property he can write. For more property he wants to write, family members' permission he should take. So if a Muslim dies, as I told you, if he has 3 sons, 2 daughters, then 2 daughters will get 2 shares, 3 sons will get 6 shares. So 6 plus 2, 8. So you divide 1/8 to the daughter, 2/8 to each son. Like that, the Muslim personal law. Similarly, Muslim marriage, a Muslim can marry 4 persons simultaneously. That means he can have first wife, second wife, third wife, permitted. The law, personal law permits. Whereas Hindu law, only there is no bigamy or polygamy, only monogamy. Before 1955 Hindu Marriage Act, male person have bigamy, female is prohibited, only monogamy. Whereas by 1955 Hindu Marriage Act, monogamy, both for male and female. That's why before 1955 in all the Jamindars, Rajas, your Puranas, a king used to have elderly wife. Nowadays, if you say Chinna Veedu, that's all, finish. Second one is illegal only, not permitted. So this is the personal law. So differs from person to person. The Transfer of Property Act, as we know, there is a person, living person to another living person can pass on through sale, gift, mortgage, is dealt by the Transfer of Property Act, how the property moves from one person to another person. Then the will versus nomination, we are chartered accountants, you must be very careful to understand the words nomination and will. We normally give less importance. So what is meant by nomination? Nominate. If a person goes and opens a bank account, the bank manager will ask, sir, do you want to nominate somebody? But then the assessee will ask, sir, what is meant by nomination? Sir, in case you are not there, as a banker, I should not say you should not be there. In case you are not there, to whom I should pay the money? That is an LIC policy nomination, bank FD nomination. Shares when you open a demat account, nomination. So this nomination is a process of succession, but it's not giving the rights of succession. It is giving only the person to whom the property has to be delivered is nomination. For example, if a person is having both son and daughter, he gives nomination in the name of daughter in the bank account. But in his will, he says, all my bank FDs shall go after my death to my son. Please understand my example. A person, Mr. X, deposited money in the bank and gave a nomination, his daughter's name. The person before his death wrote a will saying, all my bank FD shall go to my son only after my death. Then what is the process? The daughter should go to bank, receive the money, maybe to her account, and the daughter should hand over the money to the son, because son is the real owner. Daughter is only a nominee for namesake. Interregnum arrangement, temporary arrangement of the law. She cannot say that I am the owner. She is only receiving on behalf of her brother. She has to hand over. This is the will versus nomination. Will dominates, will prevails over the nomination. Nomination is only an interregnum arrangement. For this rule, there is an exception. What I said is the general rule for bank FD, LIC policy, any other types. But for this rule, there is an exception. What is that exception? In the case of limited companies, the shares and securities, the old Companies Act 1956 section 109A, the new 2013 Companies Act section 72 say that notwithstanding anything contained in every testamentary law, the shares and securities shall pass on to the nominee only. Under testamentary law, will may say something. Here only for the sake of shares and securities, including equity shares, debentures, preference shares, for these things, because thousands and crores of applications pending before the company law board. I am the real owner, I am the real owner. How to partition those shares? Who is the real owner? In whose name a limited company shall register as a shareholder after the death of the original shareholder? Company law ministry is not able to tackle these lakhs of disputes. They amended the law saying, once a nomination is given, nomination is final. He is the real owner in spite of the testamentary law, any other law. The will is as per the Indian Succession Act 1925. So it overrules only in the case of this thing because of the section 72 of the new Companies Act and the old Companies Act 109A. Okay, these are all the laws, how the property will pass on account of the death. Just I am trying to explain. So HUF, actually I told you a 3-hour subject. We are yet to start the HUF. Another 45 minutes is there. Quickly I will try to cover the law of succession, because these are all the uncommon subjects, unfamiliar subjects, which as chartered accountants we should try to understand. That's why I spent this much time. Now I am going to the Hindu Succession Act. HUF means the HUF is not defined in the Income Tax Act, though Income Tax Act used the person definition 231 includes. Then in this case, the Supreme Court has given what is HUF means, as the Hindu law defines HUF. That's all. It's not by contract, it's by status, not the persons forming. The law forms the HUF. That's all. As I told you, male succession is section 8. That means if a male in a Hindu family dies, for his self-acquired property, to whom it should go? First, it should go to class 1 legal heirs. In the class 1 legal heirs, mother, wife, children are there. Father is not there. If no class 1 heir is living, then go to class 2 heirs. Class 2 heirs, father, brother, sisters are there. If no father, brother, sisters are there existing, then go to agnates. If agnates are there, then go to cognates. This is the male succession, section 8 of the Hindu Succession Act for self-acquired property. So I repeat, if an young engineer dies in an accident, the father files a suit in the court or in the road, means he will file against a car, lorry, something. This boy died in a factory working as an engineer. This young boy died in a factory. Nowadays in Andhra Pradesh factories, some people die. So a young engineer died. The company wants to pay some compensation. The government wants to pay some compensation. This boy is having mother, father, brother, sister, unmarried. That is. Then to whom the company should pay this compensation? If the boy is a Hindu, as per male succession of the Hindu Succession Act, the mother, wife, children are class 1 heirs. In the class 1 heirs, only mother is there. He is unmarried. No wife, no children. So the total compensation shall go to mother, not a rupee to father, because he is a Hindu. This is how you should understand the male succession. If you go to the female succession is different. As I told you, male succession, first to go to class 1 heir, all the class 1 heirs will get equally. Whereas if no class 1 heir is living, then go to class 2 heirs. Then class 2 heirs, line by line order of prayer. First to father. If father is alive, give to father. If father is not there, then brothers and sisters. So if brothers and sisters are not there, next line. Like that, line by line, you should go in the class 2 heirs. If you go to agnates, if nothing is there, Sagotra, Sapinda are known as agnates, same gotra. Then in agnates also, his superior agnates is a down the line agnates. So among the agnates, who is the close relative? Degrees, how many degrees? His father's father is agnate. His brother's son is also agnate. So if the chain relationship between the deceased and the person who claims the property is a unbroken male chain, means agnate. With a broken male chain but female is there, means cognates. So first to see the search for cognates. If cognates are not there, go to cognates. If that male succession, there are no class 1 heirs, class 2 heirs, cognates, the property will go to government. That's how the male succession is returned. Similarly, if you go to female succession, in the case of a female dying, if he is having wife and husband and children equally will get that female's property, self-acquired property. If husband is not there, children will get it. If husband and children are not there, her parents will get it. So in her parents also, first father will get it. If father is not there, mother will get it. If father and mother are not there, father's relatives will get it. So like that, the female succession is section 15, the male succession is section 8. Then the HUF section 6, this is the most controversy what you have seen. Now, Supreme Court through a larger bench has settled on August 12th last month. So the devolution to co-partners is touched about the Hindu Succession Act. Hindu Succession Act mainly to do Hindus' individual property, how it devolves on the members of the family, we have seen, but Section 6 deals with the devolution among the co-partners. Who are the co-partners? As I told you, if it is a ancestral property, it is a HUF, the Karta is managing. So the Karta, from the Karta's hands, co-partners who get the right by birth can claim the partition and take the property. Even without any co-partners claiming, the Karta on his own can divide the property among the co-partners and say, I am retaining my share as a co-partner, Karta. I am a co-partner plus Karta, and my share I am retaining. Your shares you please take. So this partition, either by the Karta or by the co-partners who claim that, either on their own by mutual understanding or through arbitration or through court, partition can take place. So the partition need not be equal. The rights are equal, but they can agree. I take only small amount, you take bigger amount. So the rights, they can mutually, nothing is gift. It's only partition by birth what they got. And one more thing, a particular co-partner can say, I don't want any property. I am accepting this total partition. That means before the partition or during the partition, a person can say, I am relinquishing my rights in the property. Because normally in this part of the country, if a female, though they got their right, even now as per the Supreme Court decision, and that normally at the time of marriage, a substantial amount of the family is given to her, and at least just before the marriage, the Karta says, I am giving you this much. Please, from tomorrow, the marriage day, you are, as per law, bound to follow your husband's words. This is the Hindu law. So now till the marriage, father's words you should obey. Please write a relinquishment deed saying that my rights which I got by birth in the family, I am relinquishing in favor of brother, she writes, suppose. Even if rights in the favor of her only one brother, the rights will go to family. Even if rights in the favor of family, family together will enjoy it. So a person normally relinquishes. If you don't take care and by belief, she will not claim, my son-in-law is a good boy, he will be a good boy. Only some other day when you receive a notice from your daughter, you will know how good your son-in-law is. So taking care of the legal rights and the relinquishment. Now, will the relinquishment be sufficient? No more problem? Still problem. What is the problem? Father, son, daughter. Daughter before marriage relinquished her property. Now the father and son are enjoying. Now suddenly father dies. Then she will come back. What I relinquished is in the joint family property, my 1/3 right. But the property has gone to father and brother. Both are having half. In father's half, on his death again I am having half. Please give me. You gave I gave the relinquishment to my father, the family. Father's again property I am having. So what the second precaution the father should take? The father should have written a will as per section 30 of the will, the Indian Succession Act, Hindu Succession Act, section 30 of the Hindu Succession Act. I am writing, I am Karta of the family. As a co-partner, I got right. My right after my death shall go absolutely to my son to be enjoyed by his family, no one else. Then daughter cannot claim unless that will is returned. So the will can be registered will, unregistered will. To have more evidentiary value, you must register it. Any number of times you can go on changing the will. If only one clause you have to change, you can write a codicil to the will also. An unregistered will also is valid. Even after registered will, there can be an unregistered will. Will can be for some of the properties or for the total properties. Will can be in the name of some of the family members, some of the outsiders also. A person can write different wills for different properties. So the will should be in writing, not necessarily on stamp paper, witnessed by 2 witnesses. Witnesses need not know the contents of the will. Will can be in a vernacular language. So will shall be executed. Date is essential. If a person writes so many wills, last will is prevailing over the other wills. So like that, the will has to be taken care of, because nowadays no one knows what is permanent. So the will safeguard future litigation by the family members. So I have already touched that converts disability. If a Hindu family, if a male or a female converts into a non-Hindu religion, then they lose their right because of section 26 of the. Not only they, after conversion they died, their children also, because from their grandfather can they get, they are also prohibited. So from claiming from their grandfather's property, because their parents have converted into anything. These all with the HUF property only. So section 19 of the Special Marriage Act also says, the moment the marriage is not as per Hindu Marriage Act, the marriage is as per the Special Marriage Act, then they are cut off from HUF. Though no other religion conversion, the other person married is also Hindu. Wife and husband both are Hindus, but they lose their connection as co-partners in their respective parents' HUFs. This is the effect of section 19 of the Special Marriage Act. Then quickly I will go to these HUF intricacies. So far I tried to explain you in brief what is individual property, individual PAN number you are filing the returns, what is HUF property, and HUF taxable income and you are filing the returns. So the HUF slab rates are separately applicable, exemptions are there, deductions are there. For these advantages you can have, and once you have the HUF, your children, male children only can have HUF. Your daughters, though as co-partners, they get the share, but it is their individual capacity only. Still that Hindu law is not amended, Hindu Succession Act only is amended, because Hindu law is not codified, it is a custom. Even now, only male chain will continue. Only by birth the girls will get. Actually, the 1985 Andhra Pradesh Act says unmarried daughter. Crystal clear. On the day those girls who are unmarried in the family, they get no confusion. Whereas the 2005 Act said daughters in the family from this amendment data. Then daughter means the controversy. That's what Prakash versus Pulvati 2016 decision. Though it is a division bench, the Supreme Court said daughter means father should be alive. As on 9/9/2005, in that family, father should be alive. That daughter also should be alive. If both are alive only, this 2005 Central Government Union of India Hindu Succession Amendment Act Section 6 will apply. Otherwise, if father is not there, then she is not a daughter. She is only a female member of the family. That's the word daughter has to be interpreted, they said. That decision is annulled now in 2020 August 12, saying that don't interpret like that. The intention of the act is, if the father is alive or not, daughter is alive or not, that daughter will get the share, because her children can claim now. There is no partition. They go to their maternal uncle, mothers, brothers, please give the share. My mother, as on 2005, got this right. You are not partition. So before 2004 December, if partition already has taken place, means they cannot claim. If there is no partition, then all the daughters, whether married or unmarried, they can claim even now. So that is the effect of the Supreme Court decision. HUF business after total partition can be converted into a valid. So this is a beautiful case law. So in HUF, father and 3 sons are there. All are jointly doing a big business. Then the father effects a partition of the family, total family partition. Now the father and 3 sons once again join as partners in a partnership firm and continue the same business. This how is there. So actually what I have not touched in my first half an hour, not only the income, the losses also on death will get carried forward to some extent. So losses carry forward, section 78, though 72, 78 you are seeing losses set off carry forward. some of the losses of the erstwhile business, loss of the deceased will get carried forward if the successors continue the business. So that's how loss, normally one person's loss cannot be set off in the hands of the other person. But here, on account of succession, it can be set off. That point I have not elaborated because want of time. So the Karta can take Karta having managed the HUF. If the other co-partners agree, can take salary also from the HUF. These are another tax planning. Individual members of the HUF, they have got their own salary income. Their incomes they can invest with the HUF and they can take interest. From the HUF, individuals can take interest, or HUF individuals can have interest from the HUF, or HUF can lend the money to individuals and take interest. This is how it can be there. So, who is a Hindu? I have already explained you. Hindus, Sikhs, Buddhists, and Jains are a part of HUF. So, even two members in a family can constitute HUF. So, this a number of decisions are there. What is two members constituting HUF? The father is having 3 sons. First 2 sons are married. Last son is not married. The father wants to effect a partition. Then, in the name of that unmarried major son also, one portion of the property is segregated, total partition has taken place. Now, if that is there, in the hands of that unmarried son, already he is having one individual pawn number, individual self-acquired assets, maybe salary, maybe other properties. Something is there in that. Now, after partition, till the date of his marriage, he should keep separate the properties, but income clubbing provision is there. He should club and file the return. Once he gets married, sufficient from the date of marriage, for example, in the middle of the year he got married. For the total year, the HUF income, he must take a new pawn number and file. That's how the case law. 2 members are sufficient. Member word is different, co-partner is different. Here only one co-partner, but a wife is a member in the family. A family means 2 persons. For example, that boy married a Christian. No, 2 persons must be Hindus. If that boy marries a Christian, HUF will not be there. And after marrying a Christian, they get first child is a son. They name the son as Krishna. Then the son is a Hindu. Father is a Hindu. Wife only is a Christian. The moment the son is born, then the new HUF will come. So that's how the word 2 members is the minimum for constituting a family. These are the case laws. So the difference between co-partners and members, I have explained you that those who get the right by birth in the joint family are the co-partners. Those who come into the family but no rights in the joint family property are the members. So every member, every co-partner is normally first a member. Then by birth what you get the right is a co-partner. And members means these co-partners' wives are members of the family. So how HUF accumulates wealth? As I told you, how a new HUF will come into existence. If there is already a HUF, by making a total partition only. For example, in southern India, Kerala in 1976 abolished the family system, Hindu family. HUF is not there in Kerala now, only individuals. Whereas the same Kerala man who is a Hindu, if he comes to Tamil Nadu and acquires a property, then he can have his HUF. So long as he resides in Kerala, he cannot have his HUF. So Hindus, wherever they are there throughout India, except Kerala, because Kerala state abolished the Hindu law, Hindu undivided family status. So only everything is self-acquired property. So then by gift, as I told you, if a grandmother writes a gift, this grandmother is having some shares. She says, you, my grandson, you are doing good. I don't know how many days I will live. Because of affection towards you, I am now gifting all my shares to you to be enjoyed by you, your wife and children. If the gift deed is there, with the same recitals, then in the hands of that grandson, through gift what she received also will constitute a HUF. Similarly, third example is blending. What is blending? The members in the HUF, though HUF nucleus is only 50 lakhs property, each individual member self-acquired properties and some each 5 crores, 5 crores. They want to throw into the common HUF. It is not individual gifting to HUF. It is throwing the individual property into the common hotspot of the HUF. That is known as blending. Thereby, HUF is a smaller one. Then all the individuals throwing into the HUF the property, HUF property will accumulate. That's how the blending is a peculiar thing which is not equal to gift, peculiar to Hindu law. Then by will I have already given example that even a father, all his self-acquired property, either a mother, not necessarily father, mother, grandmother, through will, that means on the death, you should enjoy as a family. Then through will also, a HUF will come. And the last is a reunion. That means already 4 brothers, 4 HUFs are there. That means each one enjoying separately. They want to have one HUF, that is known as a reunion. If already by partition, some HUFs are there, then all the properties, what they got in the original total partition, if they bring in, not some portion, all they should bring in, that is the law. So then it will come. And by gift, when I touched, one condition is there. The grandson, his wife and son or daughter should be there, then the grandmother's gift creates HUF. If the grandson is unmarried, grandson is married, no children, even if grandmother writes the gift, it will be individual property only. The moment the child is born, then only it will become a HUF property. Because for gift, 2 co-partners are necessary to fresh constitute. By devolution, partition, 1 co-partner is sufficient. Whereas for gift, the law, there should be minimum 2 co-partners to receive the gift. That's why then it constitutes a HUF. So these are all the small differences. Something more I can tell because of the time lag. By 6:30 we have to close. So that's why I am hurrying. So what is HUF partition? I have already told you. HUF total partition means, because as chartered accountants we only have to write the partition deed. There are 10 to 15 types of common mistakes in writing the partition deed. You have to write very carefully. Otherwise, say, for one of the ex-chief ministers of the state, the partition deed is written in such a way, so much care we have taken, but some small, one agriculture tractor we missed, then partition deed is invalid, he said. Again, we wrote another partition deed, we got it. So like that, the partition deed, when you write, you should be very careful. So all the properties of the erstwhile HUF, you should bring into the deed. Nothing you should do, including the cooking kitchen vessels. So nothing you should leave. All the property should be there, and all the co-partners should be there. Some of the co-partners may not be taking even a 1 rupee, but all the co-partners, all the properties. All the co-partners means 2 degrees, 3 degrees. Grandfather is there. Grandfather is having 3 sons. Those 3 sons each 2, 6 grandsons. So 6 plus 3 plus 1, 7 co-partners in the family should write the partition deed. Then only it is a total partition. Total partition means all the properties, all the co-partners, if they execute, it is a total partition deed. Then, as I told you, hitherto assessed HUF only should claim the partition, which the officer, as per 171(1) and 173, the officer should pass an order, and 171(9), partial partition is not recognized. The partition shall be by metes and bounds. What is the word metes and bounds? Metes and bounds means if there is 10 acres land, 5 members have to each 2 acres, or first fellow 3 acres, second fellow 2 acres. Identify with boundary, metes and bounds. Don't write all the 5 members, each 1/5 in all the 10 acres together. It is not a partition deed. So by metes and bounds, the partition should be there. Where there is a possibility for partitioning, identifying, you identify it. where there is no partition, only one house is there for HUF. Yes, in that house you say 1/5, all the people can live. Because house we cannot, on the day of partition, break into 5 parts. Whereas the lands you can break, you identify. So that's how the word by meets and bounds, because the law we are interpreting. To be recognized by the EU, ITO, I have already said. So obligation of erstwhile co-partners, as I said, a joint and several liability. Is the registration necessary? Hindu law says not necessary. 50 years back, 100 years back, even to my knowledge, from my own relatives' experience, my cousins, 30 years back, unregistered partition deed taken to the Tahsildar office. Tahsildar office, one agriculture passbook divided into 4 agriculture passbooks, take and go away. From the date, partition is total partition effective. There is no necessity of paying any stamp duty and registering the partition deed. So the unregistered partition deed, all the family members go to the office. Tahsildar, yes, your partition I accept, divides this and gives the new agriculture passbooks. Then also it is valid. So the law, Hindu law is not saying, so whereas the Registration Act, if you register, then the stamp duty is also very, very minimal. So one highest portion is exempted from the stamp duty. And whenever you're registering this HUF partition deed, take care. As many co-partners are there, that many original copies register. Stamp duty you are paying only once, but each person should get one original. That means it is law valid. Don't say that just like sale. If 4 persons are the buyers also, one sale deed means only one sale deed copy. 4 persons buyers means though mention 4 persons name, 4 copies they will not give, you cannot get. Whereas in the case of partition, if 4 or 5 persons are getting partition, stamp duty or one portion exempt, for all other portion you pay 1% stamp duty, but all the 5 originals you will get. That's how the partition. Because for each one's portion, to pledge, to mortgage, to gift, to sell, original title deed is necessary. That's how you should take the registration and how many copies. That's how I have explained. So who can claim partition? As I said, every co-partner claim, even a minor can claim through her or his mother. You can claim. The 2016 Prakash versus Pulavati, the decision, Supreme Court decision, I said where daughter means father and daughter should live as on 9/9/2005. That is overruled by, to some extent, that even if father is not there, daughter will get. That is Danamma versus Sumanananda versus this is the Supreme Court decision later on. But now this decision is Vineet Sharma versus Packet. This is the latest decision. Father need not surviving. Daughter need not be surviving. Still daughter's children also will get the share. That is the latest decision of last month, 12th. Then what is the status of a partition property? Partitioned property, see, will become again in the hands of sons. If they are married, if they are having children, new HUF, new PAN number you should get. In the hands of daughter, it becomes only individual property. That's all. She becomes a member of her husband, and though she is a co-partner in father's thing, and so for example, in a HUF, father died, no sons, only 2 daughters are. Then mother and these 2 daughters constitutes HUF. Number of decisions. So mother and 2 daughters constitute HUF because 2 daughters are co-partners. 2 daughters unmarried. Okay. 2 daughters married. 2 daughters married also in their husband's HUFs, so they become in a family, they become the members. But here co-partners. So the 2 daughters with mother can carry on without any partition. One HUF number and then continue. Not new HUF. When the father was alive, what was the HUF name and PAN number? Same PAN numbers, the 2 daughters and mother can continue. No necessity of taking a new PAN number. That's how. See there. So HUF can be an unequal partition, I have already told you. Then mother and widow, what happens to the mother? Or HUF Karta's wife, or the Karta's mother is there. Now the partition. Then that mother can say, are you all getting partitioned? I am only a member, you are co-partners. Give me some share to me for my maintenance, not a equal along with the sons, but for my maintenance, I have got a right in the family. So the members, ladies, can claim a portion in the family. But they normally they will not claim because they have the faith in the family members that they will take care of. Because if the family members, if a wife is not taken care of by the husband, wife under the criminal law can go and give a complaint because this husband is not taking care of my money, for my living, my maintenance, he is not taking care of. Means it's a criminal act. So that's how they know the law. So that's how the things will take care of. So the court can go give a partition, or by arbitration you can have a partition, by mutual consent you can have a partition. So after partition, the surrender of the old pawn and then taking new pawn, I have already explained you. The name of the ownership in the records, if it is a urban property with the municipal panchayati records, if it is a rural property in the revenue records, the name of the owner for that property you should get changed. So that's how the examples. Gifts by and to HF. This is the most controversial, especially whenever cash shortage is there from HUF to individual, whenever HUF is shortage, individual to HUF. Now, after 1718, there's a 269 ST is there. Cash gifts are not possible. It is not planning. You should have through bank evidence only the gifts. Now, whether HUF can receive gifts from its members, yes is the answer. Two co-persons must have already explained you. Under 56.210, any person receiving from any other person without consideration, there are exceptions by will, by partition, from the relatives. Now, relatives includes, for individual HUF is a relative, for HUF individual is a relative. So from individuals, if you receive also, nothing will be there. But what 64.2 says? 64.2 says clubbing provision. In the case of an individual, if he throws in something to the common headquarter of the HUF, till the HUF is partitioned, whatever the HUF hands is to be clubbed in the hands of the individual. That is 64.2. So this is still there even after 56.210. One should be careful about this thing. So then, if you are throwing something into the common headquarter, when you should do? Say HUF property is separate, individual property is separate. And just one day before the total partition, let the individuals throw into the HUF. Next day you partition, clubbing provisions, nothing will have it. Because during the pre-partition only 64.2, thrown into the HUF and then partition, no question of this planning, you have to do it. HUF can give only reasonable gifts to its members, pious gifts. So it cannot be just like that, unless it is a total partition. By giving some gifts, substantial gifts, it amounts to partial partition. So it's not valid. HUF law is not permitting. HUF cannot give any gifts to strangers. The karta, illegal acts, that means he must be for only for family members. For third parties, he cannot give gifts. Those gifts are invalid. For illegal purposes, he cannot mortgage. He cannot sell the property. Any co-person can file a suit and then say, it is HUF property, but we all got the right. If you are selling for your illegal expenses, illegal say objects, it can be declared as invalid. These are all the things. So now another 5 to 10 minutes. Any questions? If questions are there, we will take up. I will close this sharing. I thank you for giving me this patient listening. So more than 2 hours, I try to say explain what little I know. I thank both Nellore and Tirupati branch management for giving me this opportunity of once again going through the provisions and then trying to explain it. Organizers, please, any questions you got? Chat box, please.
Sir, 2 doubts we got from through chat box, sir. Can you shall I read out, sir?
Read out.
One doubt from Sri Jagadish Krishna Garu, sir. A business associate having IT GST dues expired. He has expired, sir. There are no assets, sir. Whether the legal heirs are liable for the dues, sir.
If he has no assets, as I told you, in 2 places the Income Tax Act used the word estate. Estate word is not defined in the Income Tax Act. As I told you, section 159 subsection 6 deals the word the legal representative is liable to the extent he gets the estate. Now your question, a businessman expired, he left no assets, you are saying. If he has no assets, his legal heirs, his legal representative has not received anything, then he is not a legal representative at all, first of all, the definition. So the legal representative means who gets some share in the deceased property. No share is not a legal representative. No liability to file the return, no liability to pay 1 rupee tax. This is the answer. Next question.
Sir, from Murli sir. Based on recent decision by the Supreme Court, female children under Hindu family will get right by birth on the properties or liabilities. But what is the status of quo for a female child under special law?
No, there is no special law. As I said, the recent decision is only about Section 6 of the Hindu Succession Act, which was amended in 2005 by the Parliament. So I have already sufficiently explained. Maybe before my explanation, the question would have come in the chat box. So the women members can claim the share in that father's issue of property. Whatever they get out of that share claim is their individual property. They should club with their other individual income if at all it is there. Otherwise, in individual status, they have to file the return. That's the answer. Okay?
Yes, sir. Sir, another doubt from Satish sir, TN Satish sir. A businessman died and he is carrying business. How to transfer the stock to his wife as per GST and IT and implications in IT and GST, sir?
So under the GST, I think Schedule 2, a business concern as a going concern goes to another person, living person or to a deceased person, no need to pay GST. This was there in the VAT Act also. The same provision is taken care of here. So a running business, because of death, if the son is continuing, no necessity to pay GST and get the share stock from the GST point of view. Similarly, under the Income Tax Act also, till the date of death of that businessman, the son who is getting by inheritance in the name of the father, close the P&L account till the date of the death, and then in the name of the father, for that broken period of that previous year, file the return. From the day from the death, within 30 days, you apply for a new GST number, and then you carry on. The person who inherits that property in his own PAN number, in his own name, he files the P&L account, and for the broken period from the date of death till the previous year close, he will file his income tax return. This is the income tax and GST answers. Okay.
Sir, another question from Sujit Kumar sir. Sujit Kumar Jain. An assessee wants to transfer his proprietorship business to his brother with all the stock and GST credit, whether it can be done.
Yes, it is possible. Just like the previous question, same thing. It is possible as a going concern, either to brother or to a new person also. You are having in the Income Tax Act slump sale 50 capital B. So just like a slump sale means capital assets only you are seeing in the income tax capital gains chapter. As a going concern, lock, stock and barrel. That means you are not property by property transferring the capital assets, land, building, machinery. As a going concern, if you give, how to calculate the long-term capital gain, short-term gain, everything is there in 50B, the slump sale for capital assets. In the GST, just like your VAT, earlier VAT, if the business with the debtors, creditors, stock, as a lock, stock and barrel, if you transfer, there is no necessity to pay GST. The earlier person's GST input tax, this man can claim continuation. As if only GST number, new number will come. But all the continuation, business continuation will be there without paying any extra GST because it is not a transfer, it is not a sale, it is not a supply. So only transmission, the death example you gave, transfer, transmission, two words are there. If a living person to another person, if they give, it is a transfer. By death coming means it's a transmission. So by transmission, nothing is there to pay new taxes. You can continue it. That is the answer. Yes, please. Any other questions?
Sir, if a property is in the name of a spouse, maybe the woman, and if she expires, What would be the status? Whether her mother will get the share in that property?
I told you right from the beginning, if the person died is a Hindu or a Christian or a Muslim. First question. The woman died. What is her religion?
He was a Hindu.
If a Hindu woman dies, section 15, the woman died is a Hindu, section 15 of the Hindu Succession Act says, if she is married, having husband and children, her property will go to husband and children equally. First possibility. If children are not there, total property will go to husband. If children are not there, husband alone is there, but the property is her parents have given to her. Then if no children are there, what her parents have given will go back to her parents. That is the answer. You go to section 15, there is an order, so easily you can understand in 5 minutes. This is the sum and substance. Okay. Next. Any other questions?
Any more questions? Members are please ask, raise any questions they have. So if there are no questions, we can move for the vote of thanks.
Yes, please.
Yes, sir.
Thank you, sir. Thank you, Phalguna, sir. Today's your detailed explanation on
Sir,
law of succession and HUF tax
sir,
planning. Is it audible? Narasimhan garu, audible?
audible, sir. Before moving into the vote of thanks, a small announcement. So on 3rd October from evening 5 to 7 p.m. There will be a webinar on tax edit, sir. From the speaker Ramnath sir from Coimbatore. Members are all requested to join for that webinar. And now I request to Tirupati branch Vice Chairman CA Phalguna Kumar Garu to propose vote of thanks. Please, sir.
Thank you. Thank you, sir. Thank you, CA Dr. Phalguna Kumar Garu, for today's detailed explanation on law of succession and HUF and tax planning. Thank you all for giving this opportunity to propose vote of thanks. It's my privilege to propose vote of thanks on this occasion. I, CA Phalguna Kumar, on behalf of Tirupati and Nellore branch of SIRC, extend a hearty vote of thanks. I thank Tirupati branch chairman CA Sudarshanam Naidu Garu and Nellore branch chairman CA Vamsi Krishna Garu and other committee members of both the branches for well planned to jointly organize this webinar, Law of Succession and HUF and tax planning. I especially thanks today's speaker once again, Sri CA Dr. Phalguna Kumar Garu, for his efforts and valuable contribution in enlightening us on law of succession and HUF tax planning. I thank our most valuable members for attending this webinar and for their continuous support to the branch's activities. I thank the staff of both the branches for their work and support for this webinar. Thank you, one and all. Thank you very much.
Thank you. Thank you. Thank you, one and all. Subbarao garu untunnara?
Thank you all members.
Office pan. Subbarao garu Nellore VMV Subbarao garu.
ఉన్నారు సార్, లైవ్ లోనే ఉన్నారు.
అదే మ్యూట్ చేస్తున్నారు, స్పీకర్ మ్యూట్ చేస్తున్నారు. చూడండి, స్పీకర్ ఆన్ చేయండి. సుబ్బారావు గారు మొట్టమొదటి స్టార్ట్ చేసినప్పుడు మనం అందరిని పలకరించినప్పుడు కనపడలే.
సుబ్బారావు సార్, మీది అన్మ్యూట్ చేయండి సార్ మైక్.
చెప్పండి సార్.
అదే చాలా రోజులైంది మిమ్మల్ని చూసి, అందుకోసం ఒకసారి పలకరిద్దామని. మీటింగ్ అయిపోయింది, ఇంకా మామూలు పలకరింపులన్నా ఉండాలిగా.
మన కలిసాం కదా మన
ఇన్కమ్ ట్యాక్స్
మీటింగ్ కలిసాం కదా
వెబినార్ లో. అవును సార్, అవును సార్, అవును సార్. హౌ ఇస్ యువర్ న్యూ ఆఫీస్ అశ్విని? చిత్తూరు అశ్విని.
Not unmuted.
అన్మ్యూట్ చేసి అక్కడెక్కడ సౌండ్ ప్రాబ్లం దాంట్లో.
But there is a sound problem, sir. The speaker may not be getting the signals, sir. That's it.
She may be working without sound. People like me work with sound, but she will be having more practice without sound. That may be the reason. So her voice is not audible. Then Then okay, friends. If everything is over, we'll close the meeting.
Sir, thank you, Phalguna Kumar, sir. Today's actual meeting is going well, sir.
Very good.
And well, yeah, very much thank you for the support given to the Tirupati branch and Nellore branch, sir.
ఇది 3 to 4 hours కూడా చెప్పొచ్చు ఈ టాపిక్. అనేక చోట్ల ఓన్లీ HF 3 గంటలు చెప్పా అనేక చోట్ల. కానీ ఇప్పుడు ఇది కొంచెం 2 hours కి దాన్ని కరెక్ట్ గా టైం లాక్కొని నుంచి ఆ 2 hours సరిపోయేటట్టుగా కుదించా. అందులో స్పీడ్ ఎక్కువగా ఉంది. నంబర్స్ మరి ఫాలో అయిన లేదు. మధ్యలో మొట్టమొదటి స్టార్ట్ అయినప్పుడు 39, మధ్యలో 59కి పోయి ఇప్పుడు కరెక్ట్ గా పడిపోతా వచ్చింది. మళ్ళీ 31కి వచ్చింది ఇప్పుడు. కాబట్టి మెంబర్స్ వినేదానికి ఎక్కువ శ్రమ కదా, అందువల్ల తగ్గిపోయినట్టుంది. నంబర్ కష్టంగా ఉంటుంది. సో టు ది ఎక్స్టెంట్ పాసిబుల్ మనం చేయగలిగాం. థ్యాంక్ యూ మీ అందరి ఎఫర్ట్స్ ఒకటి. సో ఐ విల్ ట్రై టు క్లోజ్ ది మీటింగ్. థ్యాంక్ యూ.
Thank you, Ananda.